But of course, there are a lot of issues you need to focus on. Perhaps just a few at a global space. Perhaps we told investors not to ignore what is happening around the world. There are still stories around the likelihood that the U.S. economy will go into recession between 2019 and 2020. That's already on the news space. In case you missed it, don't forget that in the noise around the current political season. That's on one hand. If you look at the Eurozone, the economy is also getting tepid. Germany and Italy, two of the largest economies in Europe or within Eurozone, are now in technical recession. So there's a lot of news out there, the headwinds for Nigeria's economy as we step into this political transition and a new administration taking office on May the 29th. You need to focus on the stories outside. It could hurt you inside. Let's get a bit of a sense of all of this as we get the analyst, the chief market strategist from Global Markets to talk to us. Uchenna will be live to us from the Nigerian Stock Exchange. Some of the big stories we're looking at is what's going to be the story for emerging and frontier markets like Nigeria when you look at the global development. In particular, the foreign portfolio investors coming into the market after Nigeria's general elections done and dusted. So whoever comes in on May 29 will have to face not just internal issues, but externalities as well. And these are some of the issues. Some folks here are predicting that we're back to the 2001 bubble cycle as far as the US, Germany, Italy, perhaps China, and maybe a few more others are concerned. Meantime, the European Central Bank President Mario Draghi will be ending his tenure in October. Of course, folks are jostling for that. What does that mean for Nigeria, which is also a part of the global marketplace? Uchenna is ready for us at the Nigerian Stock Exchange. Good morning to have you on the program.
Good morning, sir. Good morning.
Let's hit this very quickly. What are some of the global tea leaves that you folks are reading for domestic markets at the moment? What's at the top of your agenda?
So for our economy, the Nigerian economy, the local economy, the global sentiments we're looking at, we are having the Federal Reserve stance, its monetary stance. We're also looking at the slowness in Euro growth area. So we are looking at a general global slowdown as economies have been reporting slowness in their microeconomic metrics as it slows down.
Yes, but okay, give us the top three issues, headwinds here we need to focus on.
Right. So the Euro area, major economies, Italy, Germany, are basically now in a technical recession. We have the Federal Reserve also looking to restart its quantitative easing, given the global pressure on global slowness from the rest of the world economies. We also have the oil price also trying to have that headwind, given as OPEC has reported that they see significant slowness in global demand. As we got to understand yesterday that Saudi Arabia had to go again to significantly cut its allocation in terms of production. So they were looking to actually cut by 10.2 million. Now they'll take it back by March to like 9.7, given the global slowness and growth as a headwind risk.
Uchenna, as you folks says in your report, recession is cyclical, and everyone knows, almost everybody should be aware of that by now. You know, the fear cycle around the year 2000, dot-com bubble, 2001, 8 years or 9 years after we had the 2008 global financial market. Now we're down at 2008, 2000. So it looks like every decade, every 10 years, we've got to go around this cycle. And you folks think that, yes, we are likely back to not just 2008, but perhaps 2001 dot-com bubble period, at least for the U.S., for the developed markets. How much of that headwind do you think will buffet us here in the frontier market?
Right. So as it goes, when it comes to bubbles and when it bursts, there's actually a difference in the dynamics in the economic cycle in itself. Now, recessionary phase is just natural. When you have the recovery, you have to that stagnation, and you would expect that recession to follow through. But however, the value of the dollar differs in different economic cyclical slowdown. And for the 2001 dot-com bubble, compared to the rest of the world, the U.S. economy was really doing well. So we saw a parabolic effect on the valuation of the U.S. dollar. And if we have that same scenario repeating itself during this cycle, as we were looking at, would expect that same parabolic effect in the U.S. dollar, and that is going to have that headwind risk into the emerging economy.
Yes, parabolic effect on the dollar, but this is a bit of a very crazy chart. You folks put up the U.S. Fed fund rate and the dollar index, the DXY, over a 27-year period. So if I look at this, just to try to simplify it to our viewers without getting them necessarily trying to understand those charts. But again, when there's a recession, whatever, what everybody around the world would like to see is a little bit, well, not too sure whether we want a weaker dollar or a stronger dollar, depending on what you're looking for, whether you're doing trade or you're looking for portfolio investment.
Right. So it's when it comes to that recession, people get to have flight for safety, flight for quality, and people look for safe haven assets. Now, as we've highlighted in our report, if the U.S. economy continues to do better than its counterpart economies, what would happen is investors will see significant capital flow move from different economies down to a place where they consider as safe. And as we are saying, the U.S. economy will be to stand out in that regard.
Yes, but we want investment flows here, so we can somehow pray, as it were, or hope, as it were, for a bit of a weaker dollar, which will help direct some of those portfolio capital flows into an economy like Nigeria, where we sorely need these monies, don't we?
Yeah. So if we have a weaker dollar, like the case of the financial crisis, 2008 financial crisis, the U.S. economy compared to counterpart economies was weaker. We saw capital outflow out of the U.S., given the fact that it was actually not steady enough for investment. So in that case, emerging economies and frontier markets would have that, should I say, medium-term effect in terms of capital flow. But we don't see that happening this time. We don't see that happening this time because the U.S. economy has kind of created itself as a behemoth in other economies when it concerns strength of its local economy. So if we have that case to represent itself, we would see significant capital flow into the U.S. And a stronger U.S. dollar, which we need to understand that a stronger U.S. dollar is not good for emerging and frontier markets, given how our debts are being structured.
Yeah, so that means the folks contesting these elections should keep one permanent eye on what is going on outside.
Yes, we can't take that away. We can't take that away. We don't. Our economy don't stay function in isolation. We have all the global sentiments that would always affect or cause an effect on its strength or weakness, as the case may be.
Uchenna, Minister of Eagle Global Markets, thank you very much for giving us those analysis behind your report for the global markets and their impact on emerging and frontier markets this week, live to us from our studios at the Nigerian Stock Exchange. Thank you very much. It's an election season in Nigeria, but again, quite a number of issues are under discussion. Uche, we'll see you some other time. Thank you. There are quite a number of issues that have been talked about. Sometimes we talk a lot. Most times we talk about the federal government, What about the state levels when it comes to revenue, tax generation, whatever? We need to bring the subnationals into the focus, and that's what the part of the Deloitte dialogue. But of course, again, a lot of folks are still talking about 2019. What to expect on the economic and the financial markets front. But let's check in with the subnationals when it comes to revenue and tax generation. That's where we're going next after the break.